And welcome to Power Lunch. I'm Eamon Javers in today for Tyler Matheson. Here's what's ahead: an inflation battle. A growing number of strategists say stocks won't rally until inflation shows signs of rolling over. It's a key question for the market. We'll debate the answer and what it means for your investments. Plus, how much would you pay for a new car? According to Edmunds, a record share of new car buyers are shelling out $1,000 a month. The CEO of Group 1 Automotive talks sky-high car prices and whether they're here to stay. Kelly, over to you.
Always enjoy checking in with him, Eamon. Thanks. Let's check in on the markets, where stocks were negative last hour, but now they're back into positive territory. The Dow up 111, the S&P up 10 points, the Nasdaq up 6. Big mover is the yield on the 10-year. It's hitting its lowest level since May after the ISM survey today weakened to a 2-year low. New orders fell below 50. This was up at 3.5% just a couple weeks ago, and we are now firmly below 2.9. Big implications for the housing market. It's not just here where we've seen a reset. Metals are lower as well. Copper down another 2.5%. This is the 17-month low now on slowdown concerns, and its fourth straight negative week. Again, it's down today almost 3%. Eamon?
Now, the inflation debate is probably one of the most important for markets right now, if not the most important debate out there. The economic data that we've gotten over the past few weeks has been anything but definitive on where inflation is actually headed. So our next two guests aren't on the same side of the aisle when it comes to the big question of where inflation is going from here. Let's bring in Keith Fitz-Gerald, Fitz-Gerald Group Principal, along with Ron Insana of Schroders North America. He's a senior advisor there and, of course, a CNBC contributor. Guys, thanks for being here. Keith, let's start with you, because you're bringing the bad news here. I like to get the bad news out of the way first. You think it's going to get worse from here. Explain why.
Well, here's the thing. It's not a rates problem like everybody thinks. It's a policy issue. And I say inflation is going to get worse because many of the supply chain challenges that we're talking about have not worked their way through the system. The consumers are feeling pinched. They have no problem there. Retailers are not going to back off prices anytime soon. And there's still a lot of money in the system chasing comparatively good services and quality stocks. Now, can the markets go higher? That's actually the good news, because many of the stocks have been beaten down. They're not all the same. So inflation, bad news, does go higher, gets worse before it gets better. Fed can't fix it. It's a supply chain issue, resolves a policy. Ron's probably going to have a good side of the other coin here.
Well, let's see about that. Ron, look, it's Friday. It's coming up on a holiday weekend. Give us some good news.
Well, the bad news is the good news. We're seeing market-based indicators that are suggesting inflation is about to go down rather meaningfully. And Kelly pointed out just a couple. Not only is copper down rather dramatically, about 30%, but a host of other commodities and market-based indicators are pointing in the direction of slowing inflation and slowing growth, I should point out. In 5-year break-evens in the Treasury market are down over 100 basis points. We've gone from 359 to about 258 as of yesterday's close. Copper, soybeans, and other commodities, ex-oil, are falling. And we're seeing them in the bond market itself, with yields down as dramatically as they are, suggesting that there are a variety of concerns pointing towards slower growth and lower inflation that I think the Fed ought to pay attention to. 22 years ago, I wrote a book called The Message of the Markets. And if the markets are not yelling and screaming about this, I don't know what is. I think Fed doesn't need to do anything in the way of cutting rates, but I think it would obviously be helpful for them to stop and look around a bit before doing anything further.
Ron, let me ask you this. This might seem like a very basic question, and maybe it is, but I think a lot of folks out there across the country, when they hear that inflation might be slowing down or going away, they sort of intuitively think, well, okay, that means prices are going to go back to where they were last year. But that's not at all the case. What you mean when you say inflation is going to go away is that inflation will continue, but at a normalized pace from these prices here, and prices aren't going back to where they were in 2021 at all. So my question to you is, if that's the case, given that the prices of just about everything have increased, isn't there some period of time where the economy needs a major readjustment to these higher new prices? Workers need to push for higher salaries. Companies need to factor all that in. And don't we have a sort of a snake with the swallowing a rat problem, where we have to digest this inflation that's already come through?
Yeah, I mean, I think to make it even more graphic, I think we've always had the piglet through the python, metaphor here for inflation. It definitely has to travel through. There's that big bulge in the middle, and then it works its way through the system. And coming up against comparisons year over year in 2021 versus 21 versus against 20, yeah, the rate of inflation is going to slow just by dint of math. Now, whether or not it slows and remains elevated at current levels, I think is an open question. But you're starting to see things like housing prices fall, more houses come to market, and at some juncture, prices will actually fall. And labor may not have as much long-term negotiating power as people think, because technology is going to solve some of that labor shortage issue that's driving up wage gains in the way of automation, whether it's productivity enhancing software, whether it's robotics or other types of mechanical fixes. Eventually, wages will be less sticky than they are today. So I think inflation is going to come back down. Maybe certainly not to 2%, but it's not staying at 8. It's not staying at 6. It's maybe going to get under 4 over the course of the next 6 to 12 months.
Now, we are going to talk about those housing prices later in the show. So if you're thinking about buying or selling a house, stay tuned. We'll get to that debate. But Keith, I want to ask you this. You say the Fed can't really solve this problem. So who is going to solve this problem? What's the end state here?
Well, I think this is actually a message of optimism, because two groups are going to solve it. Number one, consumers are resilient, hopeful, and clever people. America is filled with brilliant business people of all shades, colors, creeds, sexes, everything. That's going to drive most of this, because innovation is formed into the crisis. And the other thing is supply chain. Eventually, this is going to sort itself out. There are lots of goods working their way this way. There's money in the system. Too much is chasing too little, but that's a different nuance here. What we're really talking about is the movement of consumer power. There's stuff that people still need and have to have. That's going to power the company forward. And to Ron's point, it's an adjustment. It's not like flipping a switch. That's the mistake that a lot of people are making. They're thinking you can just adjust a rate and boom, the thing's gone. That's not how this works. It's like the ocean. It ebbs and flows. And what you want to do is stand at the coast and look for the good wave, because that's the thing that's going to take us out of this.
I like that you brought up supply chain. We are going to talk about that in the next block, but give me a thought if you could, because supply chain is sort of where all of this started, right? We had this shock of demand surging back after COVID. People, importers in particular, weren't prepared to handle that. Keith, if you look at the supply chain, do you think there's any hope around the corner there?
Oh, there's no question there's hope, because, again, crisis creates opportunity. So if we have pinches, there are going to be new technologies. There's going to be new labor arrangements. There's going to be new trucking. There's going to be all kinds of new people coming in to solve this problem. So we have great computing power. We have great incentive. Companies have great purpose. So all of those things are going to work. History shows very clearly that that's the case. So you got to place a bet. Is the sun coming up tomorrow, or is it not? I believe the sun is coming up tomorrow, and we're going to get through it.
I hope the sun is coming up tomorrow, the beach is coming up tomorrow, the ocean is coming up. I hope all of it for the holiday weekend. Keith and Ron, we've got to go. Thanks so much. Keith Fitz-Gerald and Ron Insana there. Appreciate your time.
I hope your flights are on time. That's going to be my recurring theme of this.
That's the supply chain and the travel.